All right, let's talk about financial accounting. I know, it sounds super intimidating, right? But stick with me. We're going to break down its core functions and show you how it's really just the language a business uses to tell its story. Let's dive in. Yeah, look at this. When you first see a financial dashboard, it can be a lot. All those numbers, charts, and lines, it's overwhelming. But here's the secret. Behind all that complexity is a surprisingly logical story. And that's exactly what we're going to do today. We're going to decode it one simple step at a time. So to really get a handle on this, let's use a simple analogy that's going to guide us through this whole explainer. Think of accounting as a language, the actual language of business. The individual words, those are the vouchers. When you put them together, they form sentences in what we call ledgers. And all those sentences come together to tell complete stories through financial reports. See? Words, sentences, stories. That's the framework for everything. Okay, so sticking with our language analogy, let's start with the basics, the vocabulary. We're about to explore how companies use plain old numbers to communicate exactly what's happening on the inside. Every story has to start somewhere, right? Well, in the world of finance, that starting point is the transaction. So the absolute first thing any accounting system has to do is grab a record of every single financial event that happens. And I mean everything, no matter how small. And this right here, this is the fundamental building block. It's called the voucher. Think of it as the single most important atom in the financial universe. It's the official record of one single transaction. Paying a bill, getting cash, you name it. Everything, and I mean everything, starts right here. Okay, so there are a few different kinds of these vouchers. First up, we have the journal voucher. You can think of this as the accountant's Swiss Army knife. It's not for cash payments or bank transfers, but for all the other stuff, like logging depreciation, recognizing sales revenue, or, fixing a mistake. It's what keeps all the internal books nice and clean. Now for the stuff that involves actual money moving around, you've got two main players. On one side, you've got the cash voucher. This is for, physical cash, like paying for pizza for the office out of the petty cash drawer. Then, on the other side, there's the bank voucher. This covers pretty much everything else that flows through a bank account, from wire transfers to credit card payments. Okay, this slide might just look like the number 0, but it represents the single most powerful idea in all of accounting. Here's the deal. Every single voucher, no matter what kind, has to follow one unbreakable rule. Simply put, for every dollar that comes from somewhere, that's called a credit, an equal dollar has to go to somewhere else. That's a debit. It's like a law of physics for money. They have to cancel each other out and balance perfectly to 0. This one little rule is what keeps the entire system honest. All right, so we've got our building blocks, our words, but how do we make sure they're being used correctly? You can't just have people creating vouchers for anything they want, right? That brings us to our next part, the controls and processes that make sure money is spent correctly. Say, a business can't just have money flying out the door without some kind of process. There's a very structured workflow. It starts when someone needs to pay for something. They submit a formal request. Then, a manager has to look at it and say, yep, this is legit. And only then, after it's approved, can a real voucher be created and the money actually go out. And here's what that first step looks like in a real system. A payment request isn't just some quick email asking for money. It's a formal document. It captures all the important details: who gets paid, why they get paid, what department it's for, and exactly how much. This creates a super clear paper trail right from the get-go. So here's the key takeaway. This whole workflow thing, it's like the system's built-in security guard. By forcing every voucher to get a thumbs up from someone else, you're making sure at least 2 sets of eyes are on every transaction. And that simple step is incredibly powerful for catching both honest mistakes and, not so honest stuff. Okay, so we've captured all this data, and we've got controls to make sure it's good data. Now for the fun part. How do we turn this mountain of information into something we can actually use to make smart decisions? This is the big question, isn't it? We've done all this work, meticulously recording thousands of transactions. So what? What's the actual payoff? The payoff is insight, and we get that insight from reports. Now, there are a ton of them, but here are a few key ones. The general ledger? That's the big one. The complete history book of everything. The trial balance is like a quick spot check to make sure all our debits and credits still add up to 0 across the whole company. The cash flow statement, super important. It just shows you where cash is actually coming from and where it's going. And a voucher list is just what it sounds like, a simple list of all the transactions over a certain time. And this right here, this is the whole point. These reports aren't just dusty old documents. In a modern system, they are live dashboards that take this flood of raw data and turn it into real intelligence. This is what helps a manager decide, hey, can we afford to hire someone new? Or where are we bleeding money? Or is that new product actually making us a profit? All right, for our last section, let's talk about keeping things tidy. Because let's be real, no system is perfect. People make mistakes. Things get missed. A good accounting system has to have tools to clean things up and keep the books accurate over time. One of the most important health checks is called bank reconciliation. The idea is simple but so powerful. At the end of every month, you take your company's records and the official statement from the bank, and you literally compare them, line by line. This is how you catch all the little things, like checks that haven't been cashed or weird bank fees, to make sure your version of reality matches the bank's. But what happens when you find a mistake on your end? You can't just use an eraser. The system has to have proper tools. Voucher cancellation is pretty straightforward. It's like an undo button for a voucher that was made by mistake. And for trickier stuff, there's the audit journal. This lets someone with the right permissions make adjustments, even to a period that's already closed, while still leaving a crystal clear trail of what was changed and why. And this all comes down to one really important word: trust. Having tools like these ensures that the financial records aren't some fragile thing you're afraid to touch. They are a robust and trustworthy reflection of the business, with a transparent way to fix any errors that pop up. So let's bring it all together. As you've seen, a financial accounting system is way more than just a calculator. It starts with the basic words, the vouchers. It structures them with strict grammar rules, those controls and workflows, and it compiles them into reports that tell a clear, accurate, and trustworthy story about the financial health of the business. So we'll leave you with this final thought. Every single day, your company's finances are telling a story of successes, of challenges, of opportunities. The real question is, are you equipped to read it?